If you're still searching for the best stock picks for 2026, you're already behind. Not because you're stupid, not because you're lazy, but because by 2026, stock picking won't be about opinions anymore. It's about where the money is forced to go. And the uncomfortable truth is that most investors lose money because they choose bad companies. They lose because they don't understand how capital actually moves. Today, I'm going to be breaking down the only stocks that actually matter in 2026, not predictions, not hype, not Reddit favorites, but the companies the system itself depends on. Before we go any further, quick context. I'm 25. I didn't inherit any money. I didn't get lucky. I didn't start with a high income. I worked at multiple jobs through my late teens and early 20s, retail, grocery, trades. I lived mad frugally, invested consistently, and built a six-figure portfolio by owning where capital concentrates. This is not guessing. This video isn't financial advice. It's an explanation of reality. If you want grounded investing content without hype, fear, or fake predictions, make sure you drop a like on this video. It helps us reach more people who are trying to build something real instead of chasing noise. This is the big lie about the best stocks. Most people think investing is about being right, finding the next Tesla, finding the next Nvidia, finding something early. That mindset is outdated. By 2026, the market will reward positioning, not cleverness. Here's why. Markets are no longer driven by retail opinion. They're driven by institutional mandates, government spending, infrastructure needs, and index mechanics. Those forces don't care what you like. They care about what must exist for the system to function. And that is the key difference. 2026 isn't just another year. It's the point where several long-term trends collide. As of 2025, government debt levels are at historic highs. Interest rates are structurally higher than 2010s. And AI has moved from concept to infrastructure. Energy demand is accelerating faster than grid expansion, and capital is concentrating, not dispersing. This creates a brutal environment for mediocre companies, but it creates massive advantages for a small group of businesses that sit at the center of everything. And those are the stocks that matter. This is the framework, four forces that decide everything. Instead of listing top stocks, we're going to use a better framework. Going into 2026, capital is forced by four unavoidable forces. First one is AI infrastructure. The second one is energy and power constraints. And the third one is financial gatekeepers. And the fourth is index gravity. If a company sits at the intersection of these forces, it matters. If it doesn't, it's just optional. This is the first force. Okay, this is AI infrastructure. Everybody is talking about AI. Nobody actually talks about what AI actually requires to exist. AI doesn't run on ideas, it runs on compute. What does that mean exactly? It means that chips, data centers, networking, cooling, power are all going to be the source of this in 2026. In 2025 alone, global AI capex surged, data center build-outs exploded, demand for compute outpaced supply. This isn't discretionary spending. If companies want AI, they must buy infrastructure. That's why money keeps flowing into semiconductor designers, chip manufacturers, networking suppliers, and hyperscale cloud providing. Not because they're trendy, but because everything else depends on them. This is not a bubble dynamic. This is an arms race. It's going to be crazy with China and America when they go head to head with this whole arms race thing. I can't wait to see what happens. But this is why AI creates capital concentration. AI just doesn't blow off profits, it concentrates them. Training advanced models requires massive capital, scale, infrastructure, and distribution that automatically eliminates small players, which means the biggest companies get bigger. Capital flows towards balance sheets, not ideas. That's why by 2026, owning AI infrastructure isn't optional exposure, it's baseline exposure. This is the second force. This is energy and power. Here's a stat that should stop you cold in your tracks. AI workloads consume multiples more energy than traditional computing. Now add EV adoption, electrification, outdated grids, geopolitical instability. Energy isn't a sector anymore. It's a constraint. And constraints dictate pricing power. By 2026, energy demand will continue to rise. Grid upgrades will lag. Reliable power will become strategic. This is why capital is quietly flowing into utilities, energy infrastructure, grid modernization, and nuclear and base load solutions. You don't need an opinion here. The system needs power or it fails. This is why energy is a quiet wealth transfer. Energy doesn't get hype circles. It gets slow, relentless capital inflows because governments can't allow outages. Data centers can't go offline. Infrastructures can't be replaced overnight. This creates predictable, durable returns. Not explosive, not exciting, but just inevitable. This is the third force. This is financial gatekeepers. People love saying banks are dying. Payments are being disrupted. The system is changing, and it isn't. It's consolidating. By 2026, governments won't decentralize control, compliance won't lose, and financial rails won't disappear. That means payment processors, large banks, asset managers, they will remain central, not because they're loved, but because they're embedded. Every transaction still needs rails. Every economy still needs clearing. Every system still needs control points. Gatekeepers don't vanish, they just harden. This is the fourth force. This is index gravity. This is the force almost no retail investor understands. This is ETFs. They don't analyze fundamentals. They don't care about valuations. They do not care about narratives. They are auto-allocated. As companies grow, they receive more index weight. Retirement money flows in automatically. Capital reinforces performance, and this creates a feedback loop. The biggest companies get more capital simply because they're already big. This is why large caps outperform every single time. Capital always concentrates, and average companies, they always fall behind. You don't beat index gravity, you position alongside it. This is why stock picking fails. Most people, they just overtrade. They react emotionally. They chase narratives and they underestimate time. I know I did, especially when I was young. Meanwhile, institutions allocate slowly, rebalance quietly, and let math do the work. The difference isn't intelligence, it's structure. By 2026, unstructured portfolios will get punished harder than ever. This is what actually is going to work. And going to 2026, what matters is ownership over speculation, durability over excitement, and scale over novelty, inevitability over opinions. You don't need perfect picks. You just need exposure to forces that cannot reverse quickly. And that's how real portfolios survive. This is what to avoid. By 2026, these underperform consistently. This is the ones that are story-only companies, business dependent on cheap money, and companies with no pricing power. Hype without infrastructure. If it requires perfect conditions to succeed, it's fragile. And fragility gets exposed in this environment. This is the psychology shift you need. Stop asking what stock will explode and start asking what cannot be removed from the system. That one question eliminates 90% of bad investments. The best stocks going into 2026 won't feel exciting whatsoever. They'll feel obvious in hindsight. Most people will ignore them because they're boring and then wonder why their portfolio lags. The market doesn't reward excitement. It rewards positioning. If you're still watching, make sure you drop a like on this video and just know that I believe in you. If you're watching this video, you're already on the right track. Big ups for 2026. Can't wait to see what it's holding. And make sure to check out the TikToks, the YouTube shorts. I post what I'm doing at work. I do HVAC, that kind of cool stuff. See what I do. And make sure you subscribe. More banger content coming twice a week videos. And stay sexy, stay humble, and I'm out. Peace.